Hello, everyone. Welcome to tonight's Real Traders webinar event. As always, we would like to thank you for joining us on a Thursday evening. Tonight, we're super excited to have back with us Mark Nicholas, who, as you guys have known, those of you that have been a part of the community for a while, you know that every time Mark has come on, he's blown us away with his training on support and resistance, options and futures. And tonight will be no different. He's going to be talking about how to go big with small accounts. Now, if you don't know Mark, just to give you some background, Mark is a 20-year trading veteran that got his start in prop shops and hedge funds. And since then, he's been mentoring students from newbies to 25-year traders, some with institutional backgrounds such as Goldman Sachs and Deutsche Bank. He's the creator of the probability tools, and founder of daytradingzones.com, and one of our favorite contributors to our Real Traders webinar. So that's it for the intro. Welcome. And as always, if you hold your questions, I'm sure Mark will be happy to answer them at the end. Mark, are you there?
Yes. Good evening, everyone. Quick sound test. Thank you, Kevin, for the introduction. Quick yes, no. And let's get going. Brian, thanks. Steven, thank you, guys. Okay, so good evening, everybody. Again, let me shut down my Skype so we don't get interrupted unnecessarily. Again, my name is Mark Nicholas. Like Kevin mentioned, I am a 20-year veteran trader. I started in prop shops 21 years ago and started working after that for a company called JP Capital in Fort Lauderdale. And since then, I have been just like you, mostly all my life trading my own funds and consulting for prop firms and hedge funds on our tools, and the retail traders side for futures, options, and mainly helping traders understanding a concept that I've learned over the past 20 years with real money, blood, tears, and successes that hopefully can help you and hopefully help you think differently on your trading tonight, whether you are a forex trader, futures traders, and options traders, understanding some concept that literally can really tweak your trading to the next level. So tonight the idea is how do we go big with small account, and why going big with small account is crucial. I've been trading, like I told you, for about 20 years. I do millions of dollars of trades still to that date every year. I trade almost every day unless I have to fly for a conference or for a consulting to integrate our tools and processes and research, where we create buy zones, sell zones for 9 markets, and we have tools that are helping every trader make decisions for all markets with trend, support, and resistance. And the concept that it took me many years, guys, many years. When I started trading, obviously I was young. I was almost 21 years old. Okay, and it's going to be 21 years old now. That 21 years that I trade, and obviously when you start trading and you are young, you want to take more risk. And as the capital was available to me through the prop firms or the hedge funds, I had no problem doing big sizes. But then what happened is you start trading your own capital, and when you trade your own capital, it's another ball game. And so now, after 21 years doing things in this business, going around the block a couple of times, building accounts, losing some accounts, building some accounts to $1 million level, I have learned a couple of tricks that I think will change the way you look at things. So now I want to tell you that in trading, there's a big lie. And the big lie is, the big truth of trading is, as you know, and everybody in this room who has been around the block long enough should know that, is that trading is not as easy as it looks, okay? Because if it was, everybody would be a day trader. And as a matter of fact, according to the statistic of the NASD, when they did studies on the day traders, 85% to 90% of the traders lose money. So the key here is that the big lie is that it's easy to make money day trading. That's number one. especially directional buying and selling stocks, buying and selling options, buying and selling Forex. That directionally, when you have a 50-50% chance and you don't have a particular edge or particular processes or particular consistent routine, it's going to be very difficult to compete against the high frequency trading systems, the algorithm, and the professional traders. So the key questions is how, the big questions is how to reprogram yourself to think differently. Okay? That's the entire premise. How, as traders, you are going to think differently, to think like the professionals, the institutions, the market makers, and not this group here, which unfortunately at one point or another in our trading career we're all part of. You know, everybody that tells you the contrary, it's completely bullshit. It's completely BS. Everybody at one point of their life, unfortunately, they are part of that group that lose, and the majority of the traders that lose. So I want to spur your mind on two things tonight. I want to show you some PowerPoint that I had done, and I told Kevin to help me pull it out on the Giazo. I want you to understand something very profound, that it does not take a lot of money in this business to make a lot of money. So I'm going to repeat something that everybody do not understand. The misconception in this business is that you need a lot of money to make money. Of course, it's like any business. But the problem is most of us in this room do not have a lot of money. As a matter of fact, there's a lot of people in this room that do not have $30,000. So just curious, who have less than $25,000, which is the pattern day trading level? Say me, let's make it interactive. Who has less than $25,000 to trade? A capital at risk to trade every day. So let's see how many, just to get an idea. You know? And don't be afraid, just put your answer. I am the only one saying the answers with Kevin. So nobody knows your first name, nobody sees your last name, and just curious. So who has $25,000? So if I look at the answers of the room, okay, we are talking here at about 35 to 40% of the room do not have $25,000 to trade. And now if you have more than $25,000 to trade, which I have shown in 2007 with my website tradingimini.com that I used to trade $1 million, it is like, who cares about $1 million? Nobody cares about your $1 million. What people care is what is the rate of return on your trades. And what is the rate of return is everything. And I'm going to show you tonight two things that I've learned that can change your trading. Number one, I'm going to show you here with $5,000 what $5,000 can be if you truly understand how to double your account. It might take you a week, it might take you a year, it might take you 5 years, but you got to understand the power of doubling your account. And the only place, unfortunately, in the world where you can double your account pretty fast is directional options. So if you don't know anything about the options, don't worry, because I'm going to help you tonight understanding some of the concept, or at least make you think about concepts, especially if you trade futures or Forex. I'm going to show you how Forex and futures use 10 times more capital than options, have 10 times less possibility of rate of return during the day, and you could risk the same amount as you risk with your futures, and I'll show you that in an instant. So what I want you to understand tonight is two strategies. One strategy is going to be, let's assume you have a $10,000 account, okay, or you have a $15,000 account, or you have a small account. What I want to show you is there's two ways to go about it. One way, and even if you have a lot of money, it will be crucial you understand that, because I've been trading all my life with a lot of money. And it took me not even till the past few years till I went through a nasty divorce where I got a lot of my asset being taken away through the divorce proceeding, to understand that the beauty of small, when you have knowledge, when you have consistent replicable processes and good support and resistance, and know how to trade them. You need to start directional trades, which are the buy and sells, with small amounts. B, you need to use 70 to 90% of the rest of your capital at risk into high probability trades and play the market maker game and the institutional game, where you sell out of the money. You sell out of the current price with 68 to 95% chance of success. Now you're becoming the casino. So now you're going to flip the card with 70 to 90% of your money by becoming the casino, with using strategies that have 68 to 95% chance of success, whether you are right, whether the market goes sideways, whether the market goes up, whether the market goes down. I'm going to show you strategies for small accounts tonight that you can use. And they are not BS strategies. They are strategies that I do every day with real money. This is like a real, where is it? This is a real account right there. And if we go here on Apple, AAPL, you see, if I go to position, I have a one contract that everybody can do, a 20-point wide credit spread here, 550, 530, which means that I did this spread way away from the current price of Apple of 586. I am 36 points away from Apple. That's a 20-point wide that I sold for $3, and it's 9 cents. So I'm making $300 almost in that trade. I completely crushed that thing. Well, if you make $300 on a $2,000 investment, that's a 15% return on your money in less than 13 days, in the 30 days. 15% return on your money in less than 50 days. And look at the probability of success. If you look at the probability in the money, if I look at the strikes, to stay right there above this 550. Look at the probability to stay above 550. So I'm going to pull the call. We're going to go to the 550 strike and look at the probability. The probability is 90%. So I took a trade that had probably a 68% chance of success that came to a 90% chance of success right there. Okay? That is not gambling. This is having a real serious business, everybody. Who in the room is sick and tired of losing in their directional? Say me. Who in this 20-point range on the ES, 44, 66, 66, 81, who is sick and tired to lose on the ES right now? Anybody? Just about 20 people? So I guess we don't have a lot of honest people. Because I can tell you that I have been doing this for 21 years, and those range for the past 90 days on the ES have been crucifying traders. Crucifying traders. If you look at this full Pro Tool day trading zone chart here, and you pull 60-minute chart, yes, and you tell me that you are not tired of this range, okay? Well, welcome, because look at this range. It's all cluster high, cluster low. If I take a big bar, for institutions of defending price, they have defended price at 42, 43, right there, see? Right there. And institutions have defended prices here. So the point of the matter is what? If you put 90% of your capital into these crappy ranges within between, there's another cluster around here on the 67, 66 on the day trading zones dash that has been very important. If you guys play those ranges, what are the probability of making money, guys? If you use a lot of your capital to trade this crap here, this down, up, down, up, down, up, down, up, down, up, unless you know when the institutions are defending those levels with a high level of accuracy, you are getting crucified here, you know? And as a matter of fact, I can tell you by the feedback that I got from a lot of traders, a lot of people are getting hurt here. And this is very, 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 very profound. Okay? So what you got to understand is if you are going to trade this, which I trade with the SPY, not the ES, and I'll explain why, you need to trade this with small amounts. So if you trade this with small amounts, okay, you're not going to be crucified if you lose 10%, 20%. Because if you have 70% to 90% of your portfolio doing the high probability trade like the Apple credit spread with 90% chance of success, going up, 10%, 5% return, 10% return, you're like the turtle. So that thing is going to increase by 10%, 8% every month, slowly but surely. This is going to go up and down. It's going to be a double, a triple, then you'll lose 50%. It's going to be a double, a triple, you might lose another double and triple. Okay? So long you do this with small amounts, you'll be okay. But if you don't do this with small amounts, I'm telling you, it took me a lot of years to understand that the concept, the BS that has been sold to you in the marketplace as taking the big trade, put the big trade, put all your money when you have the high probability trades in your favor, it's completely BS. And the reason it's completely BS is because this game is about surviving. It's about surviving and in equity growth. And to survive this, you need to play this with small amounts and use the rest, the 70-90% of your account to go higher and higher. Now, if you are not convinced that small accounts are beautiful, well, let me show you, because this is real. If you take a $5,000 and you have the skills and you know to do this correctly, and if your account doubles, and again, it might take you 5 days, it could be yesterday. There was a trade yesterday or the day before with my SPY options triple. So sometimes you have double triple, sometimes you make 10%, sometimes you lose 20 cents because I only put 20 cents stop loss on my SPY trade. So here's what happened, and I'll explain why. If you can double an account just based on the 5,000, you make 10. 10 becomes 20, 20 becomes 40, 40, 80, 80, 160, 320, 640, a million two. All it takes is 8 compounded times that you get a double on a small account. And if you think it's not possible, well, you have to review that a couple of times, because I know a lot of, not a lot, but I know a couple of guys in the industry that have done it. You know, the guy, what's his name, who won the round robin cup, I forgot his name, Larry Williams, when he did the World Robin Cup for a couple of months, he turned $10,000 in $1.4 million in the competition. So it is possible. You just have to understand how. And the how is very easy. When you understand the premise of the pyramid of success of a trader, is here you do small directionals, 5K or less, or 5% of your account or less, and you put everything else, which is 70 to 90% into the high probability trades. I'm going to show you where you can be right, you can be wrong, the market can go up, down, it doesn't matter. So long it stays below your break even, you make the entire premium on your spreads. And at the top of the pyramid, you always want to leave about 10% of your money to a bank account that you can transfer at any moment notice to fund either your directionals here or to fund this. Because you might blow up this one and start all over again, because it doesn't matter. This one here keeps on growing up 5 or 10% every month. But the concept of trading big to make big is BS. Because even if you had $1 million account, which I had a couple of times in my lifetime, even if you have $1 million account, if you cannot master a $5,000 capital and create consistent income to achieve a double in a year, in 6 months, in 3 years overall in your account, and go for another compounded double, you are not going to be wealthy. Okay, so there's no point on doing big accounts. Does that make sense, everybody? That's it. So again, this is the big lie that traders and educators are giving you, is that you need big money, and do that big trade like a lottery ticket. No, if you are going to take a lottery ticket, you are going to play this like a lotto ticket, which means you are going to make a small amount of your entire net worth or your entire capital at risk into those directional plays. Okay, so now where do you put most of your money? Okay, there is something called a credit spread. So I am not sure how many. Who is not familiar with the direct credit spread? Say me. I get a feel. I cannot really go into details on the credit spread. I've done over the years with the Real Traders webinar community, part 3 series, I believe, Kevin, or part 4 series, where I came here also with a friend who is an hedge fund manager too, and we did a very deep recordings live like this, like tonight, impromptu on mastering credit spread. But basically, what a credit spread is, if I pull a chart, let's say on PCLN, okay, what a credit spread allows you, and it's a very unique tactic when you have the right support and resistance. What the credit spread allows you, it's a tactic where if you look at the current price, and I'm going to take a white chart because I really don't want to put it just about the tools or the stuff that we do, but more about, well, I can go to the DTZ auto plotting tool trade navigator. They are more clean. There are 7 lines instead of 27, so you can see better. So
Hello.
this is our day trading zones, 9 market, buy zones, sell zones, and caution zones for the day, where we give you a roadmap for the day. I come also in the morning and I give personally, if not me, Jack, who is also a veteran trader, what we look for the day on the ES, the SPY, the Apple, Google. We create a buy zone, sell zone based on those full pro tools that you've just seen here that have down arrow, up arrow, blue segments or pink segments for retracement, which are a little hard to interpret. There are 27 zones and they take time to master. So what we do is we condensed everything, which this is available for all markets, but we condensed everything into 9 markets, which we condensed right there into a morning blueprint with buy zone, caution zones. And like you see this morning, I came on the ES. This is posted by 8 o'clock, 8:15. It says today, if they can break out of the top of the caution zone 1881 and hold for 1887. 1881 was the big one we were looking at. If you look at the auto plotting tool this morning on ES, look how beautiful it is. And this is not a snapshot to look good. It's just a chart from eSignal. We have them available now on eSignal, Thinkorswim, and Ninja. And what we use is trade setup, and trade setup that can help you with your own support and resistance. Like for instance, here we have a cross, recross, a retest of the caution zone, boom, to the buy zone today, and they rejected the buy zone. They recrossed the buy zone, retested at 81 one more time, and boom, they puked it at the end of the day. So we have trade setup, and I'm going to show you in many charts how those trade setup works. They are very, very important to help you to do your credit spread, to do your iron condors, or to do trade even your directional forex options and futures. They are very, very helpful into trading any market, as a matter of fact. Okay, so what a credit spread is, if you are basically the idea, which is the only strategies in the world, the only strategy in the world that allows you to do this. Okay, so let me show you. If this is the DTZ analysis for Apple, if you look at Apple, okay, what we typically look is for a short towards the extreme buy zone and for a long towards the extreme sell zone, because it's like an elastic that has been extended. When you release the elastic, eventually you go back to the means, which is the caution zone or the middle part. The beauty of these strategies, that is one of the most powerful strategies that you can find and do with small accounts, is that in trading, you have a 50% shot if you go here. If you are going to trade a stock here on Apple at 587, or an option at 587, or a futures at the current price, you have a 50% chance it goes up, and you have a 50% chance it goes down. But what we do is we use cross time frames that I have used over the 20 years across the monthly, the weekly, the daily, the 60, and other time frames, certain instruments and certain indicators that work on one time frame but doesn't work on this one but work on this one, and we create those zone, buy zone and sell zone, so I have a blueprint for the day to know where I have a higher probability than 50-50. Because if you don't trade at a higher than 50-50 chance of success, you are gambling. Okay? And basically, what trading at the current price is gambling unless you have good support, good resistance, and shift of momentum. So what the credit spread allows you is that if you have a support and resistance, so just for example purposes, pretend that 615 is your monthly and your weekly resistance, and pretend the 574 is the monthly and weekly support, which I call that the main trend. You want to trade within your main trend. If you stick within your main trend, okay, and you always stick within the main trend, you buy retracement and you do less trade and you stop paying commissions to your broker, and you have a higher probability of success. If you stick to the main trend and trade any stock waiting for your main trend retracement, you have a higher chance of success. So what the credit spread allows you is, even if the stock is right there at 587, you could sell. If your bias is down, let's say that Apple retraced from the buy zone, from the 600 area down to the 580 area, you can do, instead of chasing 596, 587, there's a strategy that is only available in the options market called a credit spread, which means that you can go here where the day trading zones is 615 or above that, creating even a safety of margin. And I'm going to take a pen, so let's take things and say, okay, I'm going to short here Apple at 625. But the beauty of this is that even Apple being right there at 597, the strategies allows you to place a bet in the market that says if the Apple stays below that strike of 625, you can do a 625 to 630 call credit spread, which means you sell a call here, you buy a call here, which has a defined risk. But again, refer to that video for the credit spread. It allows you to have three things going in your favor. If Apple goes down below your short strike, which is your 625, you make money. You make the entire premium, like I did. You know, I sold something, let's say you sell something for $3 here, and you bought, so you sold the 625 call, and you bought the 630 call. What the strategies allows you, which is very powerful, it allows you to be wrong, to be right, sorry, it goes on your way, goes down. It allows you also, if the stock does nothing, to make money because of the time decay. You make consistent weekly and monthly income by just the time decay of the options. And if you are wrong, it suddenly goes up, it goes up, it goes up, it goes up. So long it goes up and stays below that 625 or your break-even, 625 plus your credit, 628. Before the expiration, you make the entire premium. This is the only strategies being offered to traders. The only strategies being offered to traders that allows you to be right, to be wrong, and the market doing nothing and you still make money. And you don't have to understand that this selling out of the money could have been selling a naked call, but I don't do naked because it requires a lot of margin. So for us, people who have lower amounts of money and a smaller account, you got to stick to a credit spread where you have a defined risk, 625, 630. And you look for about 33% of the width of the strike for a monthly. There's strategies, if done correctly, that you have to learn for weekly credit spread, monthly credit spread, and also day trading a credit spread as a replacement of a naked strategy. It's called the naked strategies of the poor. It's a wide credit spread. But the beauty of this is the only thing in the marketplace that allows you to stay below that blue line, and whether the market goes up, goes sideways, goes down, you make the entire premium, guys. And usually those premium goes between 10% to 33% return on your capital. And as you can see here with real money, you know, put my mouth where my mouth is, I sold a 20-point wide away from the current price. This was 586 on Apple right now. I sold it when the earning release came out the next morning, And if you look at the probability of staying above the short strike, the 550, 90% chance of success. And I have already made 300 on the $2,000 capital requirement, which is a 15% return, with a 90% chance of success. This is a business. This is a business, everybody. This is not gambling. When you start having a business that makes 68 to 95% chance of success trade, you have a business. You are not a gambler. And if you want to gamble, then one of the best strategies where you are going to achieve those doubles and triples are going to be the SPY. Let me show you why. So let's go to SPY. And I'm going to show any futures traders in the room who trades just futures right now. Who trades futures? Who just trades like the E-mini? Yes. I want to help you and change the way you think and the way you look at things. So here's the main options on the SPY. Okay, I want to show you a slide that can change your life, everyone. So we talked about this. We talked about the importance right there. This is a bell curve, guys. We talked about the importance if you are a new trader, and this really can change your life, that instead of trading at the current price where you have a 50% chance of success, you are going to wait for the right support and resistance. Could be your monthlies, could be your weekly, to reduce the numbers of trades, having a higher probability of success with the right shift of momentum that I'm going to show you. I'm going to show you 3 trade setups that you can use in any of your trading, but by waiting to have a higher probability of success between 68 and 95% chance of success by selling those spreads. Now, you are going to also mix that up with the $5,000 account or 5% of your account with directionals. But directionals in what? So let me spare this before we go to support and resistance and do a lot of support and resistance that can help you for every market, and I'll give you a lot of tidbits. I want to help quickly people understanding a very important concept here. Number one, if we go back to the option chain on PCLN, on selling credit spread, you collect premium. You are the one who sell premium. I want to show you on PCLN something, and you'll understand why, if you have traded options before with disastrous results, why you were the sucker and where you are going to make money on the directions. If you look at the PCLN bid and ask option spread option chain for May, do you guys see the bid and ask spread right there on the 1102 strike, 25.90 by 27.20? So my question to everybody, if today you buy that call at 27.20 and you suddenly find yourself being wrong in the trade and you have to get out and sell at 25.90, which makes you lose a 0.40. A 0.40, just to let you know, is 6 to 7% of your amount at risk on that trade, just lost in the spread. Who makes the money? You, who bought at 27.20 and buy it back at 25 or sell it at 25.90, or the guy who sell it to you at 27.20 and buy it back at 25.90, which is essentially the market maker. Who makes the money, the buyer or the seller, on a wide credit spread, on a wide option bid and ask spread like PCLN? The buyer or the seller, everyone? Who is making the money? You, the sucker, buying at 27.20, or the market maker selling it to you at 27.20 and pocketing a cool 6% if you have to get out right away? That's not even counting if you are wrong in directions. It's going to be the seller of the options. Okay? And the seller of the options is always going to make money, guys. And that's why seller of options is going to make money, because they are making money 3 ways. One, they are making money with the bid and ask spread. So here's how it will start working. Professionals start making the bid and ask spread, essentially the market makers. Number 2, they are going to make money on these options with the time decay. of the options, time decay, okay? Okay, time decay of the options, okay? Because the time decay is the value that is expiring like next week. If you look at the options next week and you look at 11:33 and you look at the options around the current price, why it closed at 11:08, you look at 11:08, look at the calls at 11:08 for next week, 24 bucks. The break even on that call, just to let you know, for you to make money by next week on that call, you need to take the current price or the current strike, let's call it 11,075, plus what you pay for the options, 24.60. That's about 11.32. If this option is not above 11.32, you are not going to make money. So can everybody tells me how much money in that 24.60 option right now is pure time value that will expire worthless by next week? How much time decay there is in this 24.60? Good answer for everybody. All of it. All of it, the 24.60 is worth nothing. You are buying an option. If you buy that 24.60 today, this is an asset that next week, if the stock stays there or goes below that 11.08, will be worth zero. Who is going to pocket the bid and ask plus that 24.60? Is that going to be you, the buyer of the option, or again the seller of the option? Who's pocketing the time value every day? Every day that time decay goes down to zero. Who's going to pocket that? This is where the professionals are, everybody. This is where all the institutions are, the professional and astute trader, and this is where I am. This is where 70 to 90% of my money is. I play the guy who sells you the option all day long. I sell you the options, I sell the credit spread, I go out of the money, I look at the support and resistance, and I stay out of the money, because the one standard, two standard deviations or the delta, they are not always accurate, especially with the market maker move. One standard deviation or two standard, they don't always work, everybody, especially those earning. This is much more accurate, because this in the day trading zones takes almost 1 year of data and combine all the support and resistance based on that 1 year of data. As you can see here, there was one of the trades set up. Double top, cross, recross, DTZ, 1340 area, retest, failure, zoom, failure, zoom. Same if you pull an Apple weekly on day trading zones. And this is where really having the right directions, the trend, the support and resistance is critical. This is a day trading zones full pro tool chart since 1991, everybody. Look at Apple. Apple posted the up arrow right there in 09 at about 107, went all the way with a blue dot. Blue dot is a continuation shift, so immediate trend up with the up arrow, down arrow. Blue dot, 60% of a continuation of a trend. So at least instead of trading and over trading, what you do is each time Apple pulls back and does a down flag, Apple pulls back, does a down flag, Apple pulls back on the support, you were buying Apple. So you were avoiding day trading crazy Apple. You know, you stay in the direction on the main trend and you keep on buying. You do less trades and you kill it. Okay, so you kill it by doing this, by buying the retracement on the main trend. And then if you zoom Apple, and you can use some simple MACDs that you can use for your own trading that's widely available. The 699, which is the fast MACDs, and the 12.26.9, which is the slow MACDs. And they are pretty accurate, guys. They really help you when there's a shift of trend, but they are lagging. See, we crossed here, but day trading zones as called the up arrows here on Apple here. See, for 50, like right there. See. So up arrow right there in 2013, blue dot, continuation, the retest, higher low, and I'm going to show you the straight setup that you can use on your chart. Higher low, higher low, higher low to the DTZ, up arrow towards that 518. They retrace right on at that 528, which was the day trading zones weekly support, and boom, within the trend, and they go to the next day trading zones, which is towards that 615. Okay, so when you have tools that helps you, whether it's the full pro tool or this, the DTC analysis, which is more affordable and which is easier to see to your eyes initially, which I told you we have it for Thinkorswim, Ninja, and eSignal. Right there, it is very helpful because it helps you for the day. This is Apple again. It helps you structure your credit spread. So either here for the call credit spread or higher here with a buffer zone here at the 565, 570 for your put spread. And it tremendously gives you an edge here, which is, I'm telling you, above and beyond the standard deviations. You always want to look at your standard deviations, but have you seen, especially during earnings season and with all the volatility pump, they are not that accurate. You know, like Apple, they had a one standard deviation and probability of 18 points after the earning move, where Apple after the earnings went up 40 to 60 points, which was a double or triple the expected move of the deltas. So the deltas doesn't really help you here. So having a structure like this really helps you for support and resistance and help you. So 3 trade setup that can help you in your trading. Now, before we go to the trade setup for the support and resistance and looking at many charts, I'll be glad to look at charts and take your questions. I want to finish concept that can help you is the SPY directional trade. I trade mainly the SPY for directionals. I want you to remember this number. Look, if you look at PCLN, look at the open interest in the stock expiring in 8 days. 20 contracts, 76 contracts, 17 contracts. Look at the open interest, 129. Can we agree that there's no liquidity in those options? Quick yes, no. Very small volume. Compare that to the SPY options, and I'm going to show you how you can trade the SPY with $1,000 to $2,000 compared to the ES with 10 times less capital, same risk, and 10 to 45 times to even 300 times more reward, and I'll show you that on the chart. Hold on 1 second, guys. I have to open the light. 1 second. So now that I pull the ES, the SPY, compare the open interest that I just showed you on the SPY, guys. 66,000 contract open, 100,000 contract open, 65,000 open. Look the volume. So number one, SPY is one of the most highest volume, highest open interest instrument ETF in the marketplace. 2, no manipulation. They cannot manipulate the SPY as badly as an option on PCLN or Apple, everything, especially when you are the buyer, because those I buy put and calls. I use them as day trading, and I am in and out for the day, and I'm going to explain to you why right now. So now I want you to see the beauty of this thing. So now look at 2 charts. We're going to look at the ES compared to the SPY on the full Pro Tool, on the DTC analysis. Look at today. If you look at that move on the ES, everybody, do you see the 1871 to the 1881 and the 1881 back to the 1871? Quick yes, no. Because I'm going to compare the rate of return, your return on investment on the ES compared to the SPY, and this is going to change your life. Okay? So look what's going to happen. Today we went on the ES from 1871 to 1881, let's say 1882. Let's say you were a super trader, you would have made 10 points on the ES, which is a profit of $500. And if you trade the ES smart, you would have traded the ES with $10,000 per contract. And that would be only a 5% return on your money. Let's say you are an aggressive trader, you use $5,000 in capital requirement to trade an ES, and you divide $500 profit for the day divided by your $5,000, that would have been a 10% return for the day. Do we all agree? Now let me compare to the SPY. If you look at the day trading zones, it was very clear this morning that we started around the right there, around the where is it? Here. That we started here around the 188 area, 187.70. So let's take the 188 call and let's compare the move from the 188 call on the SPY to the 188.75 and look what happened. If I pull the 188 on the weekly, not the one that today, but on the weekly, and you look at the 188 call right there, look how it behaved on the TOS platform chart. Look what happened to the options today. So now you are going to understand the profound things that I told you about doubling your account. Look, the option started here at about 60 cents, and it went to $1.27. Can everybody see that? That's your double. If you do 8 compounded double like this per day, okay, 8 compounded double, compounded like this with small amounts, you're a millionaire with $5,000 capital. So now look now what I just showed you. If I put a 20, and you have to understand this, you have to take it for granted. Every professional knows that 5 contract at the money SPY on the weekly, which is essentially the contract on your left, which was 50 to 60 cents, 60 cents. So 5 contract, which is 500 shares, right? Would have been a $300 capital outlay. This is versus the capital outlay of your $5,000 or your $10,000 on the ES. So number one, I just showed you are using 15 to 20 times less capital. But look at the rate of return. Here you make $500, okay, which is about a 10% return on your $5,000 capital. Here you made a 100% return on your capital. So someone is going to say, what's the risk? Well, most of the day trader take a $100 stop loss on the ES, which is 2 points. We do the same on the SPY. I use a 20-cent stop loss. And usually a 20-cent stop loss is the equivalent of 4 ES, which essentially what it does, that 20 stop loss with a 50 delta, it gives me the breathing room of 4 ES. So not only I make 10 times more money, 15 times less capital, but I have a breathing room compared to the ES of 4 points versus 2 points. People are going to say, how did you come with the 4 points? Like this. If there's a 2-point move on the SPY, I'm sorry, because my pen, let's go to the, this is going to help you better. 2-point move on the SPY, okay, is going to equal 20 cents move on the, 2-point move on the ES. So let's redo that. I'm going to write it down because I really want you guys to get this, because this can really change your life. Okay, and then I'll show you how you can avoid the pattern day trading rule so that you can buy put and calls without being subject to the pattern day trading. Would you like me to help you understand that for the guys who have really small accounts below 25K? Anyway, because that you'll be able to do both strategies, guys. Okay, so now here's what you need to understand, and I'm going to increase this. And this is very profound, the stuff that I was sharing with you. I mean, this stuff takes 20 years. It takes money to do money day after day, day after day. There's some people tonight that are going to come and say, this is a little bit way above my head, but I promise you, options are not difficult if done correctly. Just go back into the recording, watch the credit spread part 1, part 2, part 3 that I did with the Real Traders webinar community, which is, Kevin will be able to give you a link maybe when he sends you the replay. But anyway, what you have to understand, and I just show you the power of the options versus the ES, is that a 2-point move ES or stop loss, okay, is equal to 20 cents SPY. But I buy 50 delta. So 50 delta is the correlationship between the premium of the SPY with the underlying of the premium of the options with the underlying of the SPY. So if the SPY I buy a 50 delta, and that's very profound, then a 10-cent stop loss equal 2.0 ES. So look what I do. To equal the $100, which is $100 here on your ES, what I do is I use a 20.cents stop on my SPY option that has 50 delta, which means that essentially this is a 4-point move ES. And why is that important is because most of the market makers and the institutions and the hedge funds that I have consulted with for the past 20 years, they use a 4-point ES. This is why you keep on losing trading the ES too. Because when you put 2-point ES, the hedge funds and the institutions, they put a double breathing room than you. And most of the small accounts cannot sustain a 4-point ES, which is $200 loss. But here, with my 5 contract times 20 cents, you lose the same $100 than the ES, but guess what? You made a 100% return on your money today versus a 10% return on your money on the ES with 15 and 20 times less capital. Is that profound, everybody? Is that starting to ring the bell now? Because this is profound. This is where you use that $5,000 to compound a small account into a big account and change your life. And then the rest you use out of the money strategies where you collect time decay, spread, and you become the market maker and the institutions by selling time decay. And every day you collect a check, or at least the theta, the time decay, weeklies and monthly, you make recurring source of income. So you wrap all of this to be super, super smart. You wrap all of this with the right support and resistance and the right strategy. And here are the setup that I use for my support and resistance, which you can use for any of your support and resistance, which will help you for any market. My favorite ones are, I'm going to show you where most of the traders screwed up support and resistance. Traders trade from support to resistance. They are long, higher highs, higher lows, higher highs, higher lows. Yeah, we understand that. They get out of their long here at the resistance and they do it the right way, but they do mistake. Crucial mistake number one is they start to short right away. What you don't understand is the high frequency trading system, they see your order flow here. So they see the bid and ask, you know, it's like they see their level two, they see your level 2, and you don't see them because they have something called the dark pool where you don't even see the big guys order. And they see your little orders or your resistance or a round number, let's say 1800 on the ES or 1900. And what they do is they push your order through. So they stop you on your short. They go to a point called the neutral point where there's no acceleration. It could be 1810 on the ES. And then what they do essentially is when the bid stops going higher, it's like in physics, is a shift of momentum. It hooks and it recross back down. So essentially, this is the same price, but you don't have the same probability of success. Here, you have a 55 to a 60% chance of losing money to short right at your resistance instead of waiting for the cross above and the cross back below your resistance point, where you have a 62% chance of making money. My favorite trade setup also is a cross, recross, retest. Don't forget that those trade setup could be combined with a chart formation like a double top, a head and shoulder, doesn't matter. But remember those patterns, they work always, especially on my stuff. Cross, recross, retest. And this is my favorite one because you have already the lower high in play for a good trade. There's the channel play, net buyer, net seller, net buyer, net seller. What you have to understand is most of the traders, they screwed up the channel because they always look for the break of the channel here on the third touch. Where the statistic-wise, you have a chance 2 and 3. You have 2 chances out of 3 to make money by buying, not selling. This is where you get it wrong. You have to wait for the third touch on the top of the channel. Short here if your main trend on your weekly and daily, your weekly and monthly chart shows you down. Short here on the third touch, put a stop loss on the high candle on the third touch. Add when it recross the day trading zones, add 50% of your size here, 50% of your size here. You have an average here. You're much better than the sucker who gets stopped here. Because the guy who gets stopped here is usually the trader who got stopped here, got stopped here. He keeps on looking for the break of the channel. So let me show you in real charts before I leave, and I'll take some Q&A. but I think I went through a lot of some of the concepts that I think are profound. So we go to the DTZ analysis where you have your buy zone, caution zones, and for e-signal, thinkorswim, and TradeStation. And we derive that from the full Pro Tool. Again, we interpret for you the up arrow, the down arrow, the like this, the 27 zone, the retracement area, like those segments which are available for all market. And we focus 90% of our trade to 9 market and mainly the SPY for directionals. And I do a weekly spread, credit spread, like I showed you for Google, Apple, and you can substitute those futures. So if you want to substitute the crude, you can do USO options. If you want to substitute the bonds, you can do TLT, TBT options. And so look at every chart, and we are going to go together, look at those trade setup and see how they work beautifully for the past 3 days. And those is being given to you, so they move every day. Cross, recross, retest. Okay, so cross, retest, recross of the sell zone, the extreme sell zone, retest of the top of the caution zone, went to the buy zone, recross the buy zone today, retest the buy zone lower high, rejected. And those things happens again and again and again. Let's look at another chart from your 9 markets. Let's look at the crude, shall we? Here's your crude. Same idea. Look at your crude, a beautiful trade on the crude. Cross, recross, retest lower high. And this is not a snapshot. This is a real e-signal platform right there. Cross, recross, retest, boom, from the buy zone to the caution zone. That's $1,000 trade right there. Do you guys see that? Quick yes, no, because it's beautiful. Intranight, cross, recross, reject the top of the buy zone, boom, to the top of the caution zone. Do you guys see it? That's it. See what I mean? This is profound. Okay. What else? We go back to the want to show you the crude, the bonds, the bond market on the Trade Navigator. Look at this beauty on the bond. Is the bond showing you the same? By the way, I want to show everybody, we have hundreds and hundreds of retail members on the DTZ analysis. Right there, this is the commentary that was posted before 8 o'clock this morning with those buy zone and sell zone. So I have not changed anything. We give you the commentary. This is where really you make money, because we tell you what we look for the market to happen before it happens. If you look here correctly, look, we call the 81 caution top zone 81 on the ES was on our radar at 8 o'clock. Okay, and here we go, and that's it. See? And we tell you, like crude today, the bottom half of a caution zone is important. 99.55, 99.85. Well, guess what? On the crude, I just showed you the 99.85 was the low on today's. And look here, and we give you the buy zone, sell zone, caution zone. And then they auto plot for Ninja e-signal stuff. So that gives you some structures in all those markets to help you. Okay, so hopefully you see how it works. It's those trade setup can help you for any market, guys, for your own market. See, double top, cross, recross, retest on the bond at the 26.22 or whatever it was, the 136.22, and boom, back in the caution zone. So this works again and again and again, and it helps us structure more intelligent trade than just going and looking at trade. Plus, support and resistance is a very clean way to trade. I don't like to have my chart cluttered. Remember, you compete against the high-frequency trading system and the algorithm, everybody. It's very, very, very important. So, Conrad, the zones are fixed for the day, but they are updating every morning. So it's not like the same zone for 2 days, 3 days. The reason they are updating is because, look, I have the dailies and the 60-minute ES. I have one zone that update every hour here, but they are very accurate. You know, like here, you can see they are very, very accurate. Okay, and they help me. That's the same zone that I trade. That's the same zone that I did this Apple trade here. This is the same zone, the stuff that we do, guys. This is the same stuff that we do again and again and again and again. You know, we use those zones every day, guys. And as a matter of fact, and if you go on our site, you can get for free at daytradingzones.com a free PDF on how to master probability trading, and also get a free, there's 3 training series videos that is done with real money. Everything that I do, I try to do with real money, guys. I try to put my money where my mouth is, and this is very rare in the trading industry. And yes, the charts update on TOS with the indicator. You have to download it. We just came up with TOS. We just came up with Thinkorswim for the past 24 hours, as a matter of fact. You have to download a little file, and they are ready for Thinkorswim. So that's it. You know, if you guys have questions, I'll be happy to take any questions. All I can tell you is if you're interested to choose and test the day trading zones, navigator, analysis, and research. By the way, you would be with me every week on Tuesday for a webinar of 1 hour. There's a trial that we have put together for the Real Traders webinar community. It's only $7, 14 days. For 14 days, you can try what we do, and it's only $7, which is 50 cents per day for 14 days. And I think it's fair. It's a fair trial. And see if you make money. It's all about return on investment. If you make 10 times your money within the 14 days, I think it'll be a no-brainer for you to spend that $10, that $7. If you're not interested in using the analysis, research, and the auto plotting tool, it's fine. I highly recommend that you go in the website, just get the free training, the PDF, and the if you are new with the community, PDF and the 3 training video series, which reinforce a lot of the concept that I've talked about today. So hopefully this was helpful. Kevin, I think we'll put a link. I don't know, Kevin, if you're around. He'll put a link, and then after that, I'll take all the questions and answers that you may have.
Yeah, just to let you know,
I have no
Mark.
problem staying another.
Oh, sorry.
I'm sorry. Yeah.
Just to let you know,
ahead.
guys, you could see in there over there in the chat area, the first link is realtraderswebinar.com/DTZ free. realtraderswebinar.com/DTZ free. That's to get the free stuff. However, if you go to realtraderswebinar.com/DTZ, that will bring you to the $7 trial where you can get the 14 days access to the day trading zones analysis and auto plotting tools, which you see Mark using here. It's right in the chat box.
Thanks. Awesome. And I don't know, but if Kevin posted the link, but there's probably a link on your control panel. Let me answer some questions. So yeah, Kai, one answer. How do you avoid the pattern day trading? Yeah, I promised I was going to go over that. So here's the trick, everyone. Here's the trick of the pattern day trading. The pattern day trading rule is something like this. Don't quote me exactly. You need to maintain a 25K in your account, and if you dip below, you cannot do more than 4 round trip on a particular day for 4 days or something like that, on a 4-day period or something like. Google it and you'll see. So the guys that don't have a big account, and that's also the purpose of tonight, the way you are going to go around the PDT, guys, is you are going to do the 2 strategies that I'm showing you, because it requires a margin account to do the credit spread, which if you open a margin account, even with $10,000 or $5,000, you are going to be submitted to the PDT rule, even with $5,000. So what you do is you do your credit spread where you open them and close them weekly or monthly. Never ever open and close the spread the same day, because you are going to fall into the PDT. That's trick number 1 for making credit spread with 70% of your account. Now, what you are going to do for buying calls and puts the same day, you are going to call your broker and you are going to say, I want a cash account. I want to open with $1,000, $500 to $5,000 we talked about today, $500 to trade the SPY, okay, a cash account. So when you're on a cash account, the broker allows you to trade buy and sell, put and calls without being submitted to the PDT up to the amount of your cash available. Are we clear, everybody? This is the trick. This is how you do it. This is how you avoid the PDT. And as a matter of fact, I'm going to give you a great advice. If you are one of those guys in this room who started with $25,000 plus account, and you keep on dipping below your PDT level, you know what? Screw that. Do not add more money to your day trading career. I told you, you got to master with $5,000 all the strategies I'm showing you. You could put $1,000 to $500 to trade the SPY and $4,400 or $4,500 to trade the credit spread. Okay? And you do it the way I show you. Instead of adding more money and throwing bad money after good and good after bad and keep on bleeding and bleeding, do not do that. Do not add more money if you are 20,000 or 15,000 to go back above 15, 25. Do not do that. Close your account or open 2 accounts in different brokers, 1 cash, 1 margin, 1 only for spreads that you open and close at the beginning and close at the end of the week, or open at the beginning of the day at the end of the month for the spreads. And for the directionals, you open a cash account where you buy and sell put, and you'll be fine. Let me take a couple of other questions and we'll wrap it up. And appreciate, hopefully it was helpful to everybody. So Kai, I answered your question. As far as the recording, Danilo, I have no idea. I would guess that Kevin has the recording. Usually they put them also on the podcast on the iTunes and iStone and whatever it is. Then, yeah, Mervyn, 3 or 4, I don't know. I don't trade below the PDT for the past 20 years, Mervyn. I'm just giving you guys on how I help people with small accounts that have $10,000 or less than 25,000, how you go around that. That's the bottom line. Okay? Yes, Matt, we have a mentoring program that I do twice a year. As a matter of fact, we have one coming in June. But right now, the best thing that you could guys do if you were interested is just invest in $7, 14 days, get the analysis every day, try to understand better what we do, get the training video, and come on Tuesday when we do the Tuesday webinars. And that's probably the best bet that you can get. You know, you cannot beat that, $7 for 14 days, which is not available on our website. Okay, otherwise just take the free stuff on the website. What else? Which questions? Do you go over day trading credit spread? Yeah, you do that with the wide credit spread, which is a substitution of naked positions. And by the way, this is a substitution. This is really a substitution here of this spread on Apple. Let's go back on Apple. So do you understand? This wide credit spread on Apple right there, which I sold for $3, which is now 9 cents. So again, let's go back into it. It's a substitution for people who have small account, you know, to not do naked position, because look how much is worth the naked put, the 530 put that I buy, you know, is only worth 9 cents. When I bought it, it was only worth $1. So the maximum I could lose here is $100. But here, the maximum that I could lose was the difference of the strike. So you always want to manage your credit spread around the short strike. And I explained that a lot of time too. Let me show you something. The capital requirement for that trade was about $350. If you wanted to do a naked put, one contract naked put on Apple at the same 550, look at the margin requirement. That's it. That's why people who don't have big amounts of money or portfolio margin account, they cannot do naked. Look, if I click one naked here, okay, look at the margin requirement. I say confirm and send. The margin requirement is illegal because it requires so much money. You cannot even do it. See what I mean? So you have to be careful that the reason you cannot sell naked is because it requires a lot of margin requirement. But when you do the credit spread, you can go around that by doing wide credit spread and manage your short strikes. It's very profound. Okay. And any other questions? Let's see if I have questions I might have missed. I'm sorry if I missed some because it keeps on going up. Are the full probability tools also available on TOS? No, Kevin, not the full probability. Full probability are available on Ninja and eSignal, the full Pro tool. And the yeah. So let's see other questions. Okay, I answered that. Sophie and Jim. How can you trade PCLN with $5,000 account? That's what I just explained, John. That was the using the cash account. Any other questions? At what time on Tuesday? Usually we do the webinars on Tuesday at 4:15 for all our DTZ analysis member and mastery program students. So anyway, hopefully this was helpful, everybody. I always come and enjoy that. I had not come into the Real Traders community for an event since January, which was about four or 5 months now. And I always try to share stuff that is going to really help you. Whether you take the $7 trial or not, I don't care. Really. You know, it doesn't make me or break me. What really is important for me is that you remember somewhere in the back of your head when you are going to test the strategies that change your life, that I was part of helping you understanding those, and I had a little part of making you think differently of your trading. You have a nice evening, everybody. Thanks for coming, and thanks for your time, and hopefully it was very helpful.
All right, guys. So first off, again, we just want to thank Mark Nicholas for always, as always, coming on and just blowing us away. I mean, the feedback is just, I mean, you guys should just see the comments. It's just hundreds of people, very helpful. Thank you. I mean, Steve, Adam, WL, Jerry, Tracy, Daniel. Thank you guys so much, as always, for coming and spending your Thursday night with us. Thanks to Mark for coming and just blowing us away with information, once again, that's completely unique. And what we'll do, guys, is we'll send out the recording within the next 24 to 48 hours. And we'll include the links to the previous, the previous presentations that Mark has done, because each time it's just different. And it's just, when you combine them all, it's just, I mean, it could sell for thousands of dollars, no joke. And guys, just a quick recap. So again, if you would like to get the free video and free video series that Mark offers and his PDF, you can get that at realtraderswebinar.com/DTZ free. And if you would like to get the trial for $7, it's crazy not to take it. You get 14 days, and it'll be one of the most helpful tools you'll come back to day after day. Not to mention training with Mark every Tuesday at 4:15 p.m. You can get that by going to realtraderswebinar.com/DTZ. Guys, have a great weekend. Thank you again for coming, and we'll see you on the next Hangout.